Welcome to my channel Fast and Curious, and in today's video we are going to delve into the world of candlesticks chart. So if you have ever felt confused looking at stock market charts that are full of red and green bars, don't worry. By end of this video you are going to read them like a pro. Candlesticks charts are like the language of the markets, and once you learn to read them, you'll start understanding what buyers and sellers are really thinking. This technique has been trusted by traders for centuries, from rice traders in ancient Japan to modern day stock market pros. So, what is a candlestick chart? A candlestick chart is simply a visual way to see how the price of a stock, or gold, or even Bitcoin has moved in a specific time period. It could be a single minute, an hour, or a day. Think of it like a cricket scoreboard. Instead of runs and wickets, each candle tells you four things: where the price started, how high it went, how low it went, and where it ended. That's a complete story packed into one candle. So let's go back and visit the fascinating history of candlestick chart. So a legendary rice trader named Munehisa Homa, nicknamed the God of Markets, developed candlestick charts to understand supply, demand, and trader emotions. For over 300 years, this method worked so well in Japan that when it finally reached the West in the 1990s through Steve Nielsen's book, traders everywhere adopted it. Today, whether you are looking at stock market in the NSE, gold in MCX, or crypto, candlesticks are the go-to charting method. So there are two charts that are being widely used. One being a line chart. A line chart is like reading only the last line of a movie script. You miss the entire story. It only shows closing prices, so you can't tell if a stock had a wild up and down during the day. A candlestick chart, on the other hand, shows the full drama: the highs, the lows, the opening scene, and the closing twist. And in trading, more information means better decisions. So here's the anatomy of a candlestick chart. So the body shows the opening and closing prices, the thick rectangle in the middle. The upper wick shows the highest point, the price reached, and the lower wick shows the lowest point. If it's green, the closing price is higher than the opening. That means buyers were in control. If it is red, sellers have dominated that candlestick. Every candlestick has four sacred numbers: the open, high, low, and close. Think of it again like a cricket match summary. Open, when the match starts. High, the biggest score in a single over. Low, the worst dip in form. And close, the final score when the match ends. So let's start by reading a green candle with a practical example. Let's say a stock opened at rupees 100 and closed at 115. That's a nice green candle showing buyers were strong. If the price went as high as rupees 120 but closed lower, it means sellers stepped in at the top. If it dipped to rupees 95 before bouncing back, that shows buyers defended that lower level well. Similarly, let's have a practical example of a red candle. Imagine a stock opened at rupees 100 and closed at rupees 85. Sellers were in charge. If it briefly went up to 105 but fell, it shows selling pressure at the top. If it dipped to 80 before closing at 85, it means buyers tried to push back but couldn't change the day's trend. So what do the wicks tells us? Wicks are like behind the scenes footage of a stocks battle between buyers and sellers. A long upper wick means the stock went high but sellers pushed it down like a balloon that couldn't stay up. A long lower wick means the stock fell but buyers rescued it, a sign of support. Short wicks, that's a calm day with little fight. So the importance of a time frame with respect to a candlestick chart. So candlesticks can be plotted for any time frame. 1 minute chart are for scalpers who trade lightning fast but can be very noisy. There is also a 4-hour chart with balanced details and trend. Swing traders love them, and daily charts are best for beginners. Less noise, more clarity. If you are just starting out, look at the daily charts of Nifty 50 or Reliance to get a clear view of trends. How to start practicing today? Open a free charting platform like TradingView. Start with daily charts of popular stock. Spend 15 minutes daily. Identify green and red candles. Spot the body and wicks. Read the OHLC, that is open, high, low, close data. Look for patterns like doji and see what happens next. Just like learning guitar, the more you practice, the better you get. So what's coming next? In the next part of your journey, we'll dive into patterns like the hammer, shooting star and engulfing, the secret weapon of technical traders. We'll also cover support and resistance and how to use moving averages for timing your trades. Make sure you hit the subscribe button so you don't miss it.